Welcome back to FX Limit, your trusted source for Forex trading insights. In today's video, we're diving deep into one of the most popular tools in technical analysis, Bollinger Bands. Whether you're just starting out or you've been trading Forex for a while, mastering Bollinger Bands can give you a significant edge in the market. Today, we're going to break down the top 5 ways to trade Forex using Bollinger Bands. And as always, I'm going to show you how our FX Limit Apex Trend Indicator can complement your trading strategies. Let's get started. So, what are Bollinger Bands? In simple terms, Bollinger Bands consist of 3 lines. A middle line, which is a moving average, and 2 outer bands that measure volatility by being standard deviations away from that average. These bands expand and contract based on market volatility, and they provide useful insights into potential price movements. But knowing how to use them is key. So, let's jump into the first strategy. The first way to trade Bollinger Bands is the classic Bollinger Band bounce. It's probably one of the most well-known methods, and for a good reason. The idea here is pretty straightforward. When the price touches the lower band, it's considered oversold, and you look for buying opportunities. When the price touches the upper band, it's considered overbought, and you look for selling opportunities. However, here's where traders often get it wrong. Just because the price touches the lower band doesn't mean you should immediately jump into a trade. You need to wait for confirmation, like a reversal candlestick pattern, before entering a position. That's where the FX Limit Apex Trend Indicator comes in. It helps you spot these high-probability trade setups by giving you a reliable buy or sell signal, right when you need it. This way, you can avoid false signals and focus on more profitable trades. Now, onto the second strategy, the Bollinger Band squeeze. This is another powerful technique. The Bollinger Bands contract during periods of low volatility, and this squeeze is often a precursor to a breakout. The key here is patience. Once the bands squeeze together, a breakout, either to the upside or downside, is imminent, but you don't know when it will happen or in which direction. This is where pairing Bollinger Bands with another indicator can help confirm the breakout's direction. The FX Limit Apex Trend Indicator can be your best friend in this scenario. It doesn't just give you signals, it also helps identify trends and breakouts with high accuracy, so you can enter the market at the perfect time. You won't need to guess whether the squeeze will lead to an upward or downward move because the indicator can confirm the direction for you. The third way to trade using Bollinger Bands is something called riding the bands. In strong trending markets, the price can ride along the outer band for extended periods. For instance, during a strong uptrend, you might see the price hugging the upper band, and in a downtrend, it may ride the lower band. Many traders make the mistake of thinking that just because the price hits the upper band, it's time to sell. But when the market is trending strongly, you could miss out on substantial profits by exiting too early. Instead, look for the trend to continue, and use the middle band or moving average as a trailing stop loss. Once again, this is where the FX Limit Apex Trend Indicator can be extremely useful. It not only tells you if a trend is strong but also helps confirm whether it's a time to stay in your position and ride that trend or if it's time to exit. Strategy number 4 is Bollinger Band Divergence. Divergence happens when the price is moving in one direction while your indicator, such as RSI or MACD, is moving in the opposite direction. This usually signals that the current trend is losing steam, and a reversal might be on the way. You can use Bollinger Bands alongside an indicator like RSI to identify these moments. For example, if the price is hitting higher highs and riding the upper band, but the RSI is making lower highs, that's a warning sign. The market may be overextended and could reverse soon. Look for a reversal pattern at the bands for confirmation before entering your trade. And of course, the FX Limit Apex Trend Indicator can give you that extra layer of confirmation. By providing clear buy and sell signals, it makes sure you don't jump into the market too soon or too late. You'll know exactly when to enter and when to stay out. Finally, the 5th way to trade with Bollinger Bands is trend following. Now, Bollinger Bands aren't just for range-bound markets. They work well in trending markets too. When the